it's a really high time for inflation right now, the highest that we've seen in several decades. Is it a good idea to buy a house in times like this? The headlines in the media don't necessarily support that that's the case, but I want to show you that actually this is a very excellent time to buy a house. So this chart is just for Denver, but if you were to look for most major metros in the US, you'd see the exact same pattern. The dark blue line is the CPI, the Consumer Price Index, so that is the broadest measure of inflation that the Federal Reserve likes to look at. The dashed line is the average home price change for the Denver market. So you can see in 2000 to 2009, the CPI inflation was a little higher than the rate of appreciation for the homes, but just by a teeny tiny bit. Every other time that you look at this, the homes have grown faster in value than the price index. Real estate is actually a very excellent hedge for inflation. And there's actually a really good reason for that. If you take a look at the components that feed into CPI, the largest component by far is housing expense, both rent as well as purchasing. And why is that? Because most households' biggest cash outlay is for housing. Then you've got energy and cars and food, but those categories are much, much smaller than the average outlay for most households on their occupancy cost. So if you're concerned about inflation with, wrecking real estate, it's exactly the opposite. Real estate will keep pace with inflation, at least over the last 50 years worth of data. Now, if you are an investor, this is a gold mine. If you can buy a house that's got okay cash flow today, maybe not an exciting cash flow, but acceptable cash flow, Joe's going to get you a 30-year fixed rate mortgage that's going to be the same for forever. Every time the rent goes up, and it's going to go up a lot because of inflation, all that increase from inflation goes to your bottom line. Having a rental property in a time of high inflation is a cash machine. So we should all be talking to our prospective investors about what an amazing opportunity this is. Joe, what do you see with this?
Exactly that. And I talk about it with a lot of investors that a really important point is your 30-year fixed rate mortgage, that's inflation protected. All right. If you take out that loan at 5.5%, 6%, that payment remains the same all the way for 30 years. Now, rents are going to go up, like you mentioned, but that monthly payment is inflation protected unless you do an adjustable rate, which I'm actually getting a lot of questions about lately. Folks are like, well, Joe, this property only cash flows like $50. Maybe I should do an ARM that'll change in 3 years, but it's going to be 1% lower. So now it's going to cash flow $150. I kind of like that better. And I get that, right? We all want cash flow. We all want to make money today, but I encourage people to weigh the immediate gratification of $150 in cash flow today, and I'm going to have to deal with something in 3 years when this rate changes, or do I want a little bit less cash flow now for the stability of having something that's inflation protected that I know is never going to change? So I encourage a lot of people, and we do adjustable rates, but I encourage people to think through it. When we're going into a high inflation time or we're in a high inflation time, it might make sense to get something that is inflation protected and not necessarily sign up for something that's going to be subject to this high inflation and kicking the can down the road that you have to deal with at a later date.